I've noticed more people checking out my last Glimpse Group video. Maybe it has to do with this net loss decreasing to less than a quarter of what it was last year. Sure, there's some moderate dilution happening in the same year, but that's not unsurprising given how this company operates. The management of the Glimpse Group is running a acquisition vehicle. So unsurprising to see a couple million more shares being issued. All that means is that the company is continuing its streak. But here on the balance sheet, I think there's something even more surprising. At first, I noticed total assets has decreased by almost $9 million in a single year. To be honest, that's not particularly good news. Until we keep scrolling and realize that in the same year, total liabilities has decreased by the same $9 million. Glimpse Group, one of the most aggressive acquisition vehicles in North American markets, has suddenly become a defensive balance sheet in 2024 season. What? So this episode, let's see if we can't find out what this management is planning and how soon.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
The management's discussion begins immediately by reminding us that the Glimpse Group is an immersive technology company focused on virtual reality, VR, and augmented reality, AR, as well as spatial computing software for enterprises. In fiscal year 2024, we shifted our business focus, the strategic shift. That's what we're looking for sure. The strategic shift was driven by an expertise in spatial computing, cloud, and AI. This new trifecta of skills that the company is focused on are referred to as the Spatial Core. Lucky for us, Spatial Core appears exactly 7 times in this annual report. Let's pivot straight to looking at those usages. Glimpse Group having a hot take here. For VRAR technology, Glimpse Group believes it is imperative that the core computing that allows the VR to be calculated in front of you, that core computing should be moved out of the headset and to a cloud server. Then it can be transmitted back to the headset via broadband or 5G. According to Glimpse Group, this needs to happen to allow for a smaller, lighter form factor. When they say form factor, they mean the size and weight of the headsets that allow VR. Glimpse is focused on providing the middleware software that enables the transition towards cloud-rendered VR. While competition is evolving in the VR/AR space, Glimpse believes there is currently no dominant player in any particular immersive technology segment. That is why Glimpse believes it can become a leader in the Spatial Core section. I believe it has to be said as the financial analyst covering this stock that Spatial Core seems a little bit like HAP, a little bit like exaggeration. We just went through every single usage, all 7 of the word Spatial Core, and there wasn't much information other than a very high-level description. So stepping back to the Glimpse ecosystem, I'd like to remind us what their ecosystem looks like. They have a nice organization chart for us right now. These types of businesses live and die by their ability to pull in the same direction. Organizational chart, Glimpse Group at the top. I will be having to scroll and just reading through these in order. Government simulations provided by Brightline. Immersive storytelling provided by Sector 5 Digital. Then we have immersive education by Glimpse Learning, human interaction, aka therapies, by Foretell Reality. Then the more traditional AR experiences. I say traditional, I mean none of this is traditional technology yet, but AR experiences and 3D modeling provided by Q Real. Each of our entities, of which we've only named the top 5 biggest ones, by the way, has its own business development and sales team. That's not because we're an acquisition shop. No. Management believes it's to better focus on specific industry segments with input and coordination from Glimpse's management team. Personally, I'm a little suspicious because every acquisition-focused business ends up having this structure. You can decide whether you believe that Glimpse is doing this on purpose or not. But pulling in the same direction for Glimpse Group is related to the fact that they do not develop any hardware. That's crucial for understanding the economics going on here. Glimpse's software and service solutions are mostly compatible with any hardware. For example, Meta, Microsoft, Samsung, Google, Apple, ByteDance, HTC, HP, Lenovo, Sony, and Epson, but as well as smaller companies such as Magic Leap, Xreal, Varjo, and Vuzix. The more advanced, easier to use, and cheaper the virtual reality hardware that all these companies are building and competing with each other on becomes, well, the higher the potential it is for robust software applications to increase the market adoption. Having a fantastic piece of software doesn't matter if the hardware is clunky and unusable. And so yes, Glimpse sees itself as a sort of early stage Adobe, early stage Oracle, Salesforce. All of these are different examples of software exclusive companies that have benefited from the hardware cycles of laptops and home PCs. Glimpse is part of a select number of earlier stage companies providing immersive technology using general infrastructure software called AR Core, AR Kit, Unity, Unreal Engine. There is a part of Glimpse Group that uses all of these kits at some level. And so for a very forward-looking tech company like this one, we're going to pop into the intellectual property section just for a minute. It's easy to get overwhelmed unless you are an expert in the field. But we're still going to pull valuable information from this if we can. And immediately right off the bat, this is how early and young this company is. The company has 10 patents in the US and an additional 5 patents, that would be 15 in total, in process. 1/3 of all of its potential patents are still in process. This is how early stage Glimpse Group really is. We have cross-platform system for simulated reality, marker-based positioning of simulated reality. Since Glimpse owns the patent, their version of solving this cannot be used by any other competitor. Augmented reality geolocation using image matching, interactive mixed reality for real-world events, directly biting into what Snapchat is trying to make their business all about. They also have a social media aspect, a heads-up display with adjustable perspective. That one is one of their oldest patents. Their latest approved patent include the Spatial Core platform, as well as an AI patent, controlled non-human conversation flow in virtual reality. For these startup companies, management teams can really change everything. So I've taken us way back to the end of the 10K, Outstanding Equity Awards at fiscal year end. As of just a few weeks ago, this is what the compensation schemes are like for the several members of upper management. Beginning with President and CEO Lyron Beethoven, he's got well over $1 million in unexercised options that are not exercisable yet. But what we're going to do for each of these to understand what they're revealing about the negotiated expectations. Well, Lyron has until these dates in order to hit these price targets for the stock of Glimpse Group. As of right now, the stock is trading at $1.17, let's say $1. And most of these expiration dates are in the 2030s, so many, many years ahead, almost 10-year plan here. By March 1st, a small fraction of his options expire at a range between $2 and $3 per share. But the big boy, very clear here, by February 15th, the day after Valentine's 2033, Lyron and his Valentine hopefully will be celebrating if Glimpse's price per share is above $7. That's the big target for the president and CEO. For the CFO, Maiden Rothblum, well, he's got a decent chunk with the exact same February 15th, 2033 goal of $7 per share. The only real difference with Maiden, roughly a quarter of all of his future options, are attached to a goal of $1.50 per share in March 1st, 2034. So Maiden definitely scoring a big win in his mind. Finally, the CCO, DJ Smith, lol, has a very similar incentive structure to the president and CEO. Zooming it back out, $7 by 2033 with a bit of a parachute in the negotiation for the CFO. Well, this management team is working with their investor relations department to list out the biggest risk factors as they can describe them at this point in time. We now know that the whole company is pulling towards a stock price of $7 per share at least by 2033. The biggest risk is we're an early stage technology company. Fair. So far, Glimpse has accumulated a deficit of $63 million. They are currently devoted to securing financing, building and evolving the technology platform, as well as creating an infrastructure that allows for the growth of that technology platform, aka sales teams. While the company's cash flow has improved in recent months, we may continue to generate negative cash flow for the foreseeable future. We will need to generate significant additional revenue to achieve and sustain profitability. Our market is competitive and dynamic. Competing products and services can be introduced at any time, and of course, that could result in reduced profit margins or loss of market share. Our plans for growth will place significant demands upon our resources. If we are unsuccessful in achieving our plan for growth, our business could be harmed. Here, the smaller text says, we are actively marketing our products domestically and internationally. Our ability to manage future growth will depend on the ability to build or leverage, as applicable, a network of business partners. To build or leverage, as applicable, sales teams that keep end users and business partners informed regarding the technical features and key selling points of VR and AR products and services. And so once again, we're seeing third-party distribution and sales teams be the biggest concerns on management's mind right now. But also, continuing, the ability to attract and retain qualified technical personnel that can respond to evolving customer needs in the AR/VR space. In fourth, we have developed support capacity for end users as sales increase. Customer support is what they're talking about. And finally, in last, but still important enough to call out, the ability to expand our internal management and financial controls so that we can maintain control over operations as the number of personnel and size of the company increases. Getting into the more glimpse-specific risks now, we place significant decision-making powers with our underlying entities management. I'll add that this is a result of their acquisition-first strategy, and this presents certain risks that may cause the operating results of individual entities to vary. If we fail to timely release updates or new features to the software, our revenue could be adversely affected by slow update releases. And now, finally, deeper in the risk factors, a risk related to our acquisition strategy section. I want to zoom into this paragraph. Even though Glimpse's ecosystem provides a centralized corporate structure, each entity that they have acquired has its own business development, technology development, sales team, and general manager. That's a lot of sales teams and general managers at a tiny startup. Although we believe that the integration of our existing entities has been a success, there is still continued risk related to continued integration of the existing entities in the future. Some of these risks are out of our control. Don't know why they say that, but don't love it. Every time they buy a company, they inherit a business development, sales team, and general manager. So let's look at the receipts, look at the history of their acquisitions as the best indicator of what their future success with acquisitions might look like. Note 5 of the financial statements, the impairment of long-lived assets. And so in May of 2022, just going in order that they've listed here, Pulpo AR was acquired, but as of right now, Pulpo has not and is not expected to meet any future revenue performance milestones as defined in the asset acquisition agreement. I could say that in less words, this acquisition was a bust. In total, this has cost Glimpse Group $1.9 million, $900,000 in net asset write-offs, and down here was separately written out $1 million loss on the loan reserve. In August 2022, they also acquired BLI. That BLI acquisition has led to another $2 million loss. Sector 5D. S5D was acquired in February 2022 for $15.5 million. $14.8 million of that is now an asset impairment expense. This is by far their biggest oops in the 2022 acquisition spree they went through. And it's very interesting to go back to the 2022 season video where we covered the Glimpse Group. We were covering all of these acquisitions right as they were happening. Going back to that video, we might be able to see how much of a disappointment this really is. Coming to the earnings per share. Now, obviously, the company is still losing money, but despite some kind of ugly-looking acquisition results, they're losing substantially less money than they have been lately, arguably pushing down the right path. And while we have 16.6 million shares already out there, the company is already authorized to dilute by at least another 7 million shares. Most of that dilution will trigger on the way up if that happens. The Wall Street guys probably understood what I meant just then, but as the stock price goes up, yes, your shares will become more valuable, but it will then trigger these stock options, which will dilute the company as the price goes up. Pretty awkward. But it's also not that unusual for this level of dilution to be happening with smaller companies. You've glimpsed the future with Glimpse Group. Blink and you might miss it.
I'd like to quickly make sure that you have checked out one of the channel's 10K walkthrough videos. In those videos, we go deep on one company's annual report. Anything could happen. I seldom know where the walkthrough is going to end up at the point when I start recording. We have playlists grouping walkthroughs by industry and sector if that's your thing. Together, we'll keep working towards becoming financial sages. Please check it out.
Full on metaverse. We gon' see today. Lol.